Hello. Today, I'm unveiling a powerful four-category wealth framework that helps you stop guessing your SIP allocations forever.
50,000 rupees every month is a significant commitment, but without a specific destination, that capital often ends up scattered across mismatched funds. Many salaried professionals experience a recurring cycle, the desire to build wealth interrupted by the pressure of choosing the right funds while trying to ignore the noise of daily market volatility. When the market inevitably drops, a portfolio without a clear structure feels vulnerable. This is usually the moment when investors, driven by the stress of seeing red, stop their SIPs or sell at a loss. Research into long-term portfolio performance suggests that over 90% of return variability is driven by how you allocate your assets, not by picking the single best fund or trying to time the bottom of a crash. Investing into a random collection of funds frequently results in returns that barely outpace inflation. Reaching long-term targets requires a structure that targets different market segments simultaneously. This framework functions by dividing equity investments into four specific categories, each with a different job to do. Large cap funds form the base, providing the stability needed to keep the portfolio anchored while delivering consistent returns. The Flexi cap category provides agility, allowing managers to move capital across stocks as market conditions change. Mid-cap funds act as the growth engine, offering the potential for significant wealth compounding over several years. Small-cap funds serve as the multiplier. While carrying more risk, they provide the opportunity for exponential gains that can significantly boost the overall portfolio's XIRR. Combining these four categories balances the need for immediate stability with the requirement for long-term growth, resulting in a portfolio designed to perform across different market cycles. A strategy that looks good on a spreadsheet can still fail if it doesn't account for how you react when your portfolio value fluctuates. Investors typically fall into three categories: conservative investors who prioritize capital protection, balanced investors seeking safety and growth, and aggressive investors chasing maximum yield. For a balanced investor, the allocation might look like this: 35% in large cap for stability, 30% in flexi cap for adaptability, 20% in mid cap for growth, and 15% in small cap for higher returns. Aligning these percentages with your actual risk tolerance reduces the urge to sell during a correction, allowing your money to stay invested and compound. Moving from these categories to selecting specific funds requires looking at internal metrics that separate high-quality options from the rest. In the large cap category, efficiency is the priority. We look for the lowest expense ratios and the smallest possible tracking error, ensuring the fund follows its benchmark as closely as possible. For mid and small cap selections, we prioritize consistent performance over multiple years, rather than chasing a fund that simply had one lucky year at the top of the charts. This technical approach ensures that fund selection is based on objective data, rather than a reaction to recent headlines or short-term trends. This approach is used by families who have achieved an average XIRR of 11.27%, with over 78 lakhs managed under this system. These investors are able to stay the course because their capital is allocated in a way that matches their specific goals and their ability to handle market movements. If you want a personalized version of this four-category roadmap, you can book a free 30-minute clarity call. We'll look at your current situation and goals to see how the structure fits your needs. Share your own risk profile in the comments, conservative, balanced, or aggressive, and I will provide more detailed insights for your specific profile in the next video. Financial freedom is the byproduct of a rigorous system that aligns your capital with your risk profile, allowing compounding to work without interruption.
Subscribe to Dhansetu and turn financial knowledge into financial growth. Your journey towards smarter investing starts here.